many of you and answer as many questions as possible. So give me a second just while I find Azad, and then we confirm we're recording, and then we'll let some people up. We've also got David Adler here, who's a bankruptcy lawyer, as this is unfolding in real time. Okay. Can't see Azad. Can anyone see Azad? Here we go. Let's make co-host.
Hello.
Okay, Azad, your co-host. Are we recording?
Yeah, everything's recording. Thank you.
Okay, awesome. Over to you, Mary.
Hello, everybody, and welcome to the space. Right now, the first speaker that we have is 007.
Hey guys, just wanted to start off by saying, anybody who got caught up in the Sam Freud, whatever you want to call him, mess, heart goes out to all of you. It's sad, but unfortunately, during this sort of market that is trying to mature, I think we're all starting to understand, not your coins, not your keys. But anyway. More importantly, I wanted to ask Simon. Obviously, your reputation, what you've done in the space is, very impressive. And given what's happening in CeFi, let's call it, and Bitcoin's sort of position, and also its ability to kind of run, with basically just a few phones. Do you see this as an inflection point for Bitcoin? I know there's a conference going on the West Coast right now, literally today. But how do you see the Bitcoin community kind of coming together here, or potentially using this as an inflection point?
Yeah, I'm starting to see a lot of people that would normally be very critical of me for my affinity to Bitcoin, really starting to come over to that type of thinking. I think the important thing is to not use this as a "I told you so" kind of moment. I think the most important thing is to, and social media is just ruthless for this. I think everybody goes through experiential learning. And when you learn something because someone told you something, you really don't embrace it until it happens to you. And so the "not your keys, not your coins" lesson comes hardest from experiential learning, when it really, really hurts you, and it shocks within your body. And also when you invest too much in ICOs and you expose yourself and you end up with no Bitcoin, you end up with no Bitcoin on the other side. The temptation is to give people I told you so, but I think it's just a natural understanding that the truth prevails, the fundamentals prevails, and the fundamental of Bitcoin are vastly different from everything else. And people need to appreciate, and some people like criticize me for even being in Celsius from the Bitcoin side as well. And sometimes they're right, sometimes they're wrong, but it's all about risk management, money management, and not exposing yourself to one outcome. And so one of the outcomes you can expose yourself is just all Bitcoin, all private key. But then you feel like an idiot if you lose that private key, or any type of outcome happens as well. Where you're in the Bitcoin crash markets, you don't have something that gives you some dry powder. So I've always tried to get people ready for all different outcomes, and most people only learn when it happens to them and they experience it. So I think right now is the Bitcoin time, the "not your keys, not your not your keys, not your coins" time. And we spent a lot of time really telling everybody they shouldn't. But when I was going around, like, people were saying, "Oh, should I move it over to Binance, or should I move it over to Coinbase, or should I be moving it?" No, if you haven't ordered your Trezor and Ledger wallet, and just really understand the difference between these things. So this will be Bitcoin's time, but Bitcoin has its enemies as well. There'll be lots and lots of people that are saying, "Oh, I told you Bitcoin's a Ponzi scheme, Bitcoin's dead." that nothing changes. We've seen it all before. It just gets bigger and bigger in every adoption cycle. And what we're experiencing right now is just a much, much bigger version of what I've experienced 3 to 4 times over the last decade. And so it's now many people's turns because we're having new adoption. But the fundamentals prevail, and you have to make a decision in the end of this. Do you believe in the fundamentals or you don't? And that's a decision you have to make, and the future will determine whether you're wrong or right.
Thanks for your question, 007. Next, we have Ramsey. Ramsey, you want to unmute your mic? Okay, I'm going to go on to Amin.
Hello, everyone. Hello, Simon, Mary, and Azal. My question is for David. First of all, David, thank you for joining these calls. I can see you from way back when Celsius was happening, etc. So it's really cool to have legal experts in these calls, although Simon is becoming a legal expert and investment banking expert.
Agree.
So,
but I do have to say, I'm not a lawyer, and you shouldn't
No, you
are.
do anything.
Yeah.
Rely on Simon's legal advice.
Yeah. So, so my question is specifically to this issue of preference claims. So basically, what we're trying to evaluate here at my really damaged startup here, because I've been a lot of things that are related to these events have been happening to my runway. What I'm trying to evaluate is currently Nexo's situation. Without naming any names. So basically, there is $290 million, $19 million that was withdrawn just a few days ago in the last 24 hours or 48 hours from FTX. And these are Nexo balances. And there's basically some talk about these. They call it. There's a likelihood they will claw back into the FTX bankruptcy estate, and there's this concept of preference claims. I just want to, obviously this is not legal advice, and you're just giving, an opinion, but you are an expert in bankruptcy. So the idea is just to evaluate what is the likelihood that these withdrawals will be basically claw back into the estate for Nexo, and that changes the whole situation of Nexo solvency as a result of that. Thank you very much.
So I'm going to ask you a question.
Yes, sir.
I'm going to relate back to FTX. Somebody posted the terms of use for FTX yesterday, and I don't know if this was just the general form and then things changed as you got to the more specific forms. But the general form that I saw for the terms of service for FTX said, you keep title to your crypto, okay? And that FTX does not, there is no transfer of title, and it is your crypto. And I let me ask you, I mean, the first thing you need to look at with Nexo is what the terms of use say, right? Because in Celsius, we're all, the agreements, although they can be interpreted different ways, say that, when you open up the earn account, the terms of use say that you're agreeing to transfer your title essentially to the crypto of your crypto to Celsius. And that's the transfer of property. And then when it comes back, when you withdraw it, that's the trigger point for the preference, because the debtor is making a transfer of interest in its property back to a creditor. So the first question is, look at the terms of use to see, was there a transfer of title? Does the property belong to the debtor, or does it belong to you?
Yeah, no, I'll take a guess at it as well. I think in a trading account, they're not meant to be using your money. It's meant to just be sat there. And then if you put it, for example, if you lent it to receive some yield for somebody else that wanted to short it, I wasn't a user of FTX, but if it's for anything like Bitfinex, they have like an order book where you can receive some yield, in which case, at that point, you probably would have lent those coins to FTX. I haven't been through terms or any legal advice yet as well, in which case it would be moving, in theory, from a custody account to an investment account. So with an exchange, I'd expect a lot more to be considered custody that you're not meant to use, and that's the big the thing that has led to the fraud investigations and the criminal investigations and DOJ is that Almeida, the hedge fund, drew upon the fund allegedly drew upon the funds at the exchange that were meant to be your funds, and so that's the big thing to look into there. I don't want to go too deep into it, David.
I'll just add to what Simon was saying. Based on my experience, which has been, I've been involved in 3 SIPA liquidations, where SIPA comes in and appoints a receiver / trustee, and a broker dealer is liquidated. There is nothing that is worse than when the fund of customer property is invaded by the principals of the broker dealer that just went under. I mean, that is the most serious offense that can possibly happen, and that's what looks like happened in FTX. I can't believe I'm saying this, but it's actually worse, I think, than Celsius, because at least with Celsius, the people were lending or pushing the coin up for yield. I mean, if you have just straight custody accounts and you have the broker dealer, invading those custody accounts and lending out to an affiliate to shore up the price of its native token, it's as bad as any, SIPA liquidation that you can possibly think of. And I'll leave it at that.
Yeah, thanks, David. Simon, did you want to add anything else to that?
No, let's bring someone else up.
Okay, we've got Eric Sherman.
Hi there, Simon. In the YouTube video, you mentioned that there was a possibility of contagion related to FTX API keys.
Mm-hmm.
Can you elaborate on that? Thank you.
Yeah, so with FTX, when you have trading platforms, you have a lot of people that build their businesses on those trading platforms. And so you might have technology, trading technology, other hedge funds, all sorts of stuff that's constantly doing high frequency trading for their clients. And therefore they have funds on FTX. And so I think that there'll be a lot more businesses connected to this. In the Celsius side, we were building out a security law compliant version of the Earn program. That's how we got involved in that one for our client side anyway. But there was only a few companies that were integrated. My guess is that within an FTX where much of the liquidity comes from these third-party integrations going into order books, there's going to be a lot of contagion. I also imagine that many of these crypto lending platforms would have had a strategy of generating yield by using FTX. And so my guess is that many of those crypto lending platforms would have had client money on FTX.
Okay, thanks for your question. Investor Ox. Investor Ox, you want to unmute? Okay, I'm going to move on. And we've got someone connecting right now. Nino Trader.
Hi, everybody.
He's still connecting.
Can you hear me now?
Yes.
Just first off, thanks for hosting this. I think it's really important for the crypto community to just hear from professionals during these times. My question is this, and it's based on, I've been around Bitcoin for a while, and when crisis events like this happened in the past, money tended to flow into Bitcoin as people would come out of, what other coins, and they would just go to Bitcoin and try to put it in. But with stable coins coming out and becoming so popular, it appears like the money tends to flow that way. And my question is, now with this FTX blow up, and obviously people are saying, who can I trust out there, and what's going on, and they're losing money, of course. Do you think we're possibly coming to a time period when people will start to choose Bitcoin in the time of crisis, or even for their longer hold versus, say, stable coins, for example, when things like this happen? Like, does that make sense, the question?
Yeah. I think so. Again, I always relate things back to money management. And so most people are clueless about money management. They just have money and then they chuck everything over to an investment because they watched a YouTube influencer or something like that. But I always break up spending money, savings money, and investing. For savings, you need hard money. For spending, fiat is best because it's denominated in the same currency as your expenses. And for investing, you're putting it at risk in order to try and generate return that outperforms hard money. And so you have these three different buckets. And so now, how does that relate to where people go in times of fear? Well, in times of fear, you take assets out of things that are volatile relative to your expenses. And by that, I mean, if you're going to pay your rent in dollars and you got Bitcoin and you need that for your spending money, then you're going to convert out into stables in order to try and survive in fear in those times, because you're going to be thinking, how long have I got to survive? Whereas if you're in a slightly different position, then you'll be looking at your fiat currency and you'll be saying, well, I just want enough fiat currency in order to survive X number of months. Or I have an income and therefore I can supplement it. And therefore you go to Bitcoin because you're looking for more Bitcoin with your fiat. And that's the whole thing about fiat, switching between fiat thinking and Bitcoin thinking. So people don't think like that because they don't really have a 10-year plan for their life. They just want to try and make money fast. But when you're thinking about inflation and you're thinking about holding a stable, then even the yield on a stable that you can get one of these platforms is underperforming inflation. So you're losing wealth, but you're preserving your short-term wealth. And so it's a long answer of, most people don't think in these ways. They don't have a plan. And so they end up in stables. But yeah, if you've got enough conviction for the long-term fundamentals of Bitcoin, and many won't be able to survive that, unfortunately, because so much of their wealth has been wiped out in some of these bankruptcies, then I think it's a choice you have to make. And driving people to Bitcoin when you have to spend it short term is a very, very risky move. But accumulating Bitcoin when you believe in the long-term fundamentals, you want to earn as much fiat so you can buy as much Bitcoin into the bear markets and average across. So yeah, I think people will, you've seen in these markets that the market cap of stables tends to increase, but I saw it less this time actually versus last time in the ICO boom and bust. There was a massive spike in the volume of stables last time. But this time, I think a lot of people are concerned about, the traditional value of the dollar in terms of that. But then, you got to separate people that are trying to build wealth versus people that are trying to survive, and we all have different circumstances at different points in our life. Thank you.
Thank you for your question. Next, we have the Simons.
Hi, Simon. Hi, David. I have been following you since the beginning of the Celsius issues, and I appreciate a lot your work. Simon, I see you have put everything, and I see a lot of passion, so thank you for that. My question is, how does the FTX right now in Chapter 11, and it is for Simon and David, can affect the Celsius Chapter 11, like recovery, and what are the ties, let's say, if it worsen the scenario?
So there is some interconnected, I can only talk about public information, but there is some interconnected, things that were happening between, I think Dirty Bubble Media revealed some of those more recently, between FTX and Celsius. But I think it has a significant hit on the value of the assets. And I think it, which drives everything to a much, much more preferable longer term play. It increases the likelihood of ending up in some kind of Chapter 7, industry, let's just kill this industry type scenario. It also increases, I think, the desire to try and get a regulated solution if there is a reorg out of any of these things. And yeah, unfortunately, it just increases the time horizon and puts more pressure on what regulators are going to do next. I think those are the big things. And then there would obviously be a decrease in the short-term value of those assets. And so also less bidders. I think a lot of people are going to be affected by this and have less appetite. So I imagine that all of those would be affected.
I'll just chime in that I agree that the current environment is not conducive to, getting as many bidders as we would like or we would have hoped, like 2 months ago, a month ago, a week ago, because there's fear, right? I mean, the second largest exchange just went down, and question, by the way, what's going to happen with Voyager? I guess they're back, to square one. But what I hope from all of this is that, and I guess in some ways, if FTX gets really, really, really ugly, it could produce a very favorable, outcome, in the sense that perhaps, measures will be taken to, put, to ensure the industry and lessen the fear of customers and potentially bidders to come into this space. But, my hope is that there's a big player out there who has not gone into crypto yet, who sees an opportunity with Celsius and says, we've always wanted to get into crypto. This is the time. The values are lower because of the drop in crypto and because of the fear factor, and provide an exit that way. And I'm also hopeful that if FTX really results in a contagion, that there'll be some type of regulatory structure implemented, insurance structure implemented, so that the investors and bidders can understand the rules of the game better. That's what I have to say.
It's put a bit more conviction into the video series that I released as well, that everyone getting their assets in custody with a business model that's not subject to a bank run, and then taking all the assets and putting it into long-term securities. I think that's completely in line with what could get out.
Okay, next we have Anthony Napolitano.
Hey, what's up, Simon?
Hello.
Can you hear me well? I'm in Rome right now. I just want to make sure you guys can hear me.
You can.
Awesome. But yeah, no, I wanted to touch on a couple things that you were saying, Simon. First thing, 100%, you're on point with all the API keys for all the different trading platforms. I know probably 10 off the top of my head, and I would expect there's hundreds of companies that were running different types of trading products, from algorithmic trading to many different things that are running through FTX. So this will affect all their clients. So it's very bad for those companies. It's going to hurt them dramatically. But I wanted to talk on the point of what this means for Celsius going forward. I don't personally think it changes the situation much. At the end of the day, no one's going to be interested in bidding for FTX, in my personal opinion. I think it might actually be more appealing, Celsius, at this point. Me personally, understanding that they actually have some physical assets. Not saying those physical assets right now in this current market are worth a tremendous amount of money, but I could just say in general that knowing the situation and actually understanding it to the point that we're currently at, I think it's a lot more appealing than a lot of things in crypto. And as we all know, companies like Coinbase and Binance, you see the Coinbase stock getting crushed right now, but at the end of the day, you just probably took out the biggest competition to them. So, like, those companies are in a very good place to really, they have all the market share. It's like the banking system in America, right? We have 3 legitimate banks that own everything. that's the concept that's going on here. So I think if you could acquire these customers, acquire these entities, the different the different assets that the company has, it could be a good play. I like what David said as well, maybe an institutional player. Of course, I'm more so with you, Simon, in the sense of the self reorg and have equity and have the long upside potential. That's just me because I'm an investor. I'm the same mindset as you. I don't need the money today. I'm a long term player for the massive gain in the future. But I think it gets interesting now because I don't think CZ or anyone's going to go after FTX like we already know because I think it's just too big of a mess. So I think there's a lot of money in crypto players. Some of these exchanges talking billions of dollars. There's a lot of money out there with a few of these players that can definitely take over something like this. So I'm just interested to see, but I don't think it really changes much. I think it potentially could help in my personal opinion.
Okay, thank you, Anthony.
Thanks for your comments, Anthony. Next, we have Alexandra.
Hi, everyone. Wild week. Adding on to Anthony's comments, I think he's dead on. Kathy Wood bought a whole bunch of more Coinbase stock this week and sold her Robinhood to do it. So I think from who the players are going to be in the next round with regards to an exchange, it looks like the bets are being put on Coinbase over Robinhood. The next point I wanted to bring up and just get some thoughts on, I'm just fascinated by how quickly the bankruptcy filings are being posted in the Delaware courts. And, comparing that to how long it took Celsius to file bankruptcy, it almost seems like it, and I guess looking at where all the assets are, I'm curious to know, would Celsius have benefited the way FTX has benefited if they wouldn't have waited those 30 days to put their bankruptcy filing in?
I think the rush, I'm probably guessing, is some of those just the sheer uncertainty of these financial products. So the loans were kind of like a bit more longer term in Celsius. But the high frequency trading environment, margin calls, people shorting in the current market, a lot of those margin calls would have happened. I think you have to go really, really fast in these things, and I think these are the reasons why you don't have Chapter 11 for financial institutions, because you need to come to really fast resolutions. You got any thoughts on that, David?
Yeah, I do. First, in terms of the filing, I mean, in Delaware, it's happening fast. I mean, there are 134 entities that filed, but they were sort of forced to file because of the revelations that came out. And I'll go back to the point of, the story yesterday that $8 billion of customer funds, were shifted over to Alameda. And obviously the governmental authorities, the Justice Department, the SEC, everyone's looking into this. There's a liquidator appointed in the Bahamas yesterday. I said on the space earlier that I was on that the petitions that are being filed in Delaware right now are deficient in some ways because, first of all, I don't think they've retained bankruptcy counsel outside of Delaware yet. So the gentleman who's filing the case is a gentleman by the name of Adam Landis, very good lawyer, Delaware lawyer. But I expect that the debtor's counsel in this case will be a mega bankruptcy law firm like Weil or Skadden or somebody else. They haven't even retained that law firm yet. It's just Adam Landis filing these petitions, number one. Number two, on any bankruptcy petition, you're supposed to list the top 50 largest creditors. They haven't even listed that in their filing. So, these pieces of paper are being, dumped onto the docket, just to just to get it on file because of what happened with the appointment of the liquidator in the Bahamas yesterday. So they're forced to file right now. They don't have really bankruptcy counsel outside of Delaware, and they don't even have a list of their creditors yet. So in terms of whether Celsius would have benefited by filing sooner, I actually don't know the answer to that. I think what Celsius was trying to do was to unwind their loan so that they would have some level of cash that would be sufficient to take them through the bankruptcy, which obviously, as we can see, is not happening with the request to sell stable coins. But they wanted to clean up things in that pause period so that when they filed, they could say, basically, we've gotten out of all of our, contracts are we've liquidated them over the last 30 days and we have $150 million of cash. When you file for bankruptcy, typically the most important, and it doesn't apply in these cases, but in a regular Chapter 11, the most important thing is when you go into bankruptcy on day one, that you have financing available to get you through the case. And so from Celsius's perspective, by liquidating those loans in the 30 days, they had a chest of cash, which they've managed to almost burn through. And they wanted that. In the case of FTX, it's just, there are allegations flying everywhere, receivers being appointed. They were forced to file, and I actually don't know how that's going to play out in terms of whether it stays in an 11, whether, immediately a Chapter 11 trustee is appointed, or it's considered a stockbroker of some type and gets converted to a Chapter 7. But it on the FTX side, it is really, really a very ugly situation over at FTX.
Yeah, and I just wanted to add on that I'm on the Delaware website. They have had today a total of 7 cases, it looks like, related to FTX, where the case number has actually been assigned. And very interestingly enough, Ledger Holdings is on that list of cases that have been assigned a case number today.
Wow.
So if anyone's interested in looking at the list, I have posted it on my Twitter feed with a screenshot and then link to the actual website. And I'll step off for now. Thank you all.
Thank you, Alexandra. Next, we have Brian, and then after Brian, Daylong.
Hello, can you all hear me?
Yes.
All right, great. This is the first time talking on Spaces, but I just wanted to make a quick point. A lot of people are talking about getting their funds off of exchanges and, getting a hardware wallet. And that's still pretty intimidating for people. And people are asking, oh, should I go to Binance now? Should I go to Coinbase? Is Coinbase safe? And, because that's like the least friction way of doing it because they don't understand cold storage yet. I just want to say, just download an iOS wallet or an Android wallet and just get your funds off just immediately because those are much safer places to be. There's probably some misconception that those are not secure because everybody keeps talking about hardware wallets and cold storage. But those are perfectly safe places to be, at least for now, until you can wrap your head around what it takes to get more secure. So I just want to point that out. It's even less friction. It's even easier than setting up an account at another exchange. So it's super easy to do, and you can do it right now.
Thanks, Brian. Did you have a question for Simon?
No, that's it. I just wanted to say that because a lot of people are saying get hardware wallets, and I don't think people are following that advice.
Awesome.
for good reason. So.
Well, thank you so much for your comments. Really appreciate that. Daylong?
Hi, good afternoon or daily talk. I was wondering if Alex or anybody else of his stature, if there is someone of his stature, can comment on Prime Trust. There's a lot of hopefully just FUD going around. They're connected to a lot of the exchanges that are still doing well. They're the custodian. Is there apparently they've put up in their FAQs what would happen to Prime Trust if they went Chapter 11 or bankruptcy? Can anybody speak on what's going on there?
I don't know exactly what's going on, but I'm not following. But I imagine Prime Trust is set up as a similar way as Bank to the Future, where you segregate custody, because I have a custody account with Prime Trust. And so if Prime Trust, the company, goes bust, that would have no impact on my custody account because it follows all the regulations. It's fully segregated, and that would be a requirement and enforced by the regulators, and they'd have to have audits on that regularly.
I think that
Yeah,
speculation.
so it would be the same thing as, so Bank to the Future could go bust, and your shares and your funds would still be segregated.
The FUD is derived around, one, the FAQ coming out today. They actually deleted it and they put it back up. I think it was more they explained more in the second iteration of it, but also they deal business with Strike, and apparently the spreads on all the buying and selling on Strike, and I just, this is what I'm reading, I don't know for sure, and on Swan as well, are way super wide, to put it bluntly. So then they all custodian, the prime trust is their custodian. So those are the rumors going on today's potential next disaster. So, but that sounds good what you just said. Is there anything else you'd like to comment on? I have a follow-up question, very quick.
Go for it.
Okay, great. How come I'm hoping, and for full disclosure, I'm an equity owner of this company. I haven't heard anybody talk about INX. I'm not. What are your feelings on that? Apparently, it's the only company, as far as I know, that it went through the full SEC process of being totally regulated. They spent 3 years and $9 million to do so. How, I was hoping you can comment on them as well.
Yeah, so full disclosure, I was pitched a seed round. Alan Silbert, the brother, I think it's the brother of Barry Silbert, was the co-founder.
Barry Silbert's brother, yeah.
Yeah. So there's again, so they have a cryptocurrency exchange plus a security token exchange, and so the security token exchange and the cryptocurrency exchange is what they have. And yeah, there are several security token exchanges. So you got like T0, you got Securitize. I'm a shareholder in Securitize, and then, but yeah, the difference with INX is they also have a cryptocurrency exchange, and they did go through the incredibly painful process of getting that approved in the US. My understanding is the liquidity is not quite there yet, but maybe they integrated into other third parties. But yeah, that's a regulated option if you want to follow US regulations.
Thank you as always, Simon. Thank you also, Mary.
Thank you, Daylong. Next we have Jason.
Hey, everybody. Thank you, Mary, Simon, David. How are you doing today?
Hey, Jason.
Yeah, I just DM'd both of you that I read that FTX hired Alvarez Marcel.
Yeah, it makes sense. I mean, that'll be their financial advisors. That's the financial advisors, right, to Celsius. I don't know who counsel's going to be, but Alvarez is one of the big players, very large players on the debtor side of the equation, to come in and be the financial advisors, provide you with a CRO to run the wind down of the business. It was the predecessor to Alvarez, I believe, that put up the CROs for both Enron and WorldCom. So that's not a surprise to me. I'm just kind of curious about who's going to be bankruptcy counsel.
Oh, I am too.
That's what I have to say on that. And who's going to be the investment banker? That's going to be interesting, because the investment banker, who FTX chooses, can't be some of the investment bankers that are floating around in Celsius, because they'll basically be marketing similar assets to similar bidders.
And it can't be anyone with Voyager as well, right?
Yeah, yep. Forgot about Voyager.
Yeah, so
Yep.
they're limited.
And they've all got conflicts. This is all just one
Everyone
crazy
has a
web.
conflict.
Everyone does. That's
Yep.
That's why I wanted to DM use that real quick, because I was like, oh shit, now they're involved in all three. Like, this is getting a little hairy. But my question is,
I think it's less of a conflict with Alvarez. So, I mean, Alvarez can dispatch one of their senior managing directors to be CRO of Celsius, to be CRO of FTX. But when you get into the investment banking side of it, where you have enormous fees that are dependent upon sales, let me ask you this question: If Centerview, who's the investment banker to Kirkland, were to be the investment banker for FTX, wouldn't they be incentivized to do a deal for FTX before they did a deal for Celsius, just because they would get so much more as a percentage of the sale?
yeah, agree with you completely.
Yeah. Okay, so let's keep an eye on that.
And my question is, with what's going on with with Mr. Sun and the Tron allowing TRX to be withdrawn from FTX, David, isn't that a big no-no in Chapter 11?
Yeah, it doesn't seem right. I don't know all the details. Maybe you can fill me in on it. So I heard about.
It was a pile of shit, David. It was just Justin Sun
Okay.
It was Justin Sun doing
Oh,
what
leave it at
Justin
that.
Sun
Pile of shit. Bad.
trying to repackage one Ponzi scheme into another Ponzi scheme and token, and yeah, just Justin doing what Justin does.
Yeah, it's a forced haircut.
This guy needs to calm down, man. He's not going to stop until he goes to prison. Like, he really needs to calm down. He's playing with some serious shit right now. Like, I making moves like that, and I can't even believe, with everything that happened, that FTX would officially promote that. Like, I was
dumbfounded
shocked
too,
beyond
Simon.
shocked.
I think I DM'd you right when I saw it. I was like, holy shit. I'm like, I know you can't do this. I know you can't let funds leave if you're about to file Chapter 11. We all know this. We're going through it.
And it was literally a pump and dump manipulation of the price.
Yep.
Get out of there and into here. It was just, I just can't believe how close to the edge that guy is willing to go.
It's a
self-haircut. Sorry to interject, guys, but I'm pretty sure Justin is actually paying to reimburse everyone out of his own pocket. It's not money coming out of the estate, right? That's my understanding.
It's a self-haircut. So you're swapping your assets on FTX for, say, Tron, and it's on FTX for 25 cents, but you remove it from FTX and go sell it, it's 6 cents. So you're giving yourself a self-haircut.
Anyway, let's not talk about it. It's not a solution, not something I want to be a part of.
Very interesting. Thank you so much for your comments, Jason. Really appreciate you. Harrison.
Hey guys, Simon, I talked to you the other day on the Real Vision Space. That was a real pleasure, man. There's just a few things I wanted to follow up with you on. You said at the time that you didn't think there was a chance for financial innovation in the case of FTX because you thought there was fraud and potential Ponzi going on. Do you still believe that to be the case?
I mean, this one looks pretty extreme. I mean, I don't know enough, to be honest. I'm just speculating at this moment. I'd like to see what comes out, but this one looks pretty bad. That doesn't mean there's not the opportunity to use the bidding process innovation we've been working on. So I think it just depends. If it ends up in a Chapter 7 or it actually ends up in a bidding process, then yeah, we can certainly see what innovative opportunities there are in the bidding process. But there's no innovation on the the innovation that happened with Bitfinex was before the Chapter 11 process, based upon full disclosure and a simple business model. They just didn't have all of these craziness that you're going to see with FTX.
Thanks, Harrison. Simon, I just want to let you know it's 2:20. It's 20 past. Did you want to keep going?
Yeah, so I'm going in 40 minutes. I'm going to be on Rob's Digital Asset News channel. So I'll just keep going until about 15 minutes before. So another half hour if you want.
Awesome. Okay. Then we've got Stephen Ivan.
Just that was a mistake. Sorry.
No worries.
Simon, if you don't mind, I just wanted to ask one follow-up. Is there a possibility, Simon, of combining FTX with something like Celsius or even BlockFi or Voyager, because they're not redundant? Celsius, BlockFi, Voyager are kind of redundant assets, but FTX is not exactly redundant with Celsius. So I was thinking, do you think in that bidding process, if you did see an opportunity, you might consider combining it with Celsius?
Hey, nothing's off the table. We'll see it's too early to say right now, but if the stars and the moons and the universe all line up to a great solution, you can bet we'll do what we can.
Thanks, Harrison. Alexander.
Hey guys, can you hear me? I hope so. So first of all, thanks for letting me speak. And Simon, I have two questions, but I want to let you know where I'm coming from. So please stay with me. So I mean, the news, right? Okay, you will go from 14 billion to minus 8 billion or even 9 billion as a balance sheet hole for FTX. So on the first day already, it's called like the word Ponzi is flying around. So what it looks to me, okay, I mean, all these companies use, let's put it, their flywheel, their company flyway in an appropriate way, right? At least it seems like this. So when it comes to Celsius, actually, we kind of see that this managed me kind of even was acting conservatively with our funds. That's at least what I'm getting from. So, and now
I'll push back on that, man. That doesn't give the way that Celsius misrepresented things
Absolutely,
after week after.
100%. You're right, Simon.
not having my show being used to
Yeah.
allow for that type.
Alex still committed massive fraud.
Okay.
Okay, sorry about that. Can you still hear me? Not sure if something happened there.
Yeah, can hear you.
Sorry. Sorry. I understand. I'm just comparing currently the situation Celsius to FTX and asking myself where I would be, where would I like to be? And honestly, I mean, I'm with Celsius, right? I never had an account there, and I'm kind of lucky of that. But here, Simon, are my questions. First of all, would you say that every token, and we have 21,700 tokens, should be a security? So that's my first question. And also the second question would be, what kind of responsibility has the SAC and Mr. Gensler to take here? Because since 2.5 years, we're waiting on something that kind of, that it comes to clarification. Okay, what is actually, and I just structured for myself, what's a commodity, what's a security, and what's a pure crypto token? And for example, I don't know, would this have happened when FTX would never have a trading pair to USDC, to USDT, to true US dollar? Or would this happen anyways? Okay, but why is the SAC not coming out with, are they not able to because they don't know it?
They already have come out, yeah. So the SEC has already said that we think the Howey test is what defines a security. And they're shouting on the rooftops, trying to enforce as many people for years and years and years, and saying no one's listening to them. So they have already said what they think a security is. And so the industry goes in two directions. So outside of the US, we tend to be moving towards what's known as a virtual asset service provider regime, which is custom regulations mainly centered around anti-money laundering. And then at some stage, it needs to address everything that's been addressed over the years in the stock market, which is how do you prevent market manipulation? What's the suitable levels of disclosures for offering these tokens to investors? What's a way of ensuring that the right types of people are investing in the right level of risk? So you either create that all over again, or you continue to allow all of those practices to happen, or you kill the industry, or you define it as an instrument that already has regulations. I don't really care which way it goes, but each country will probably take their own different approach. In the US, they consider that they think they've seen all these problems before. The technology has changed, but the same types of behaviors are happening. So they might want to just fit it in with an existing regulatory regime, but there's an executive order to decide that. So this is all being figured out, whether they want to create a custom regime or whether they want to fill it in with an existing regime. But there's no doubt that everything that they feared would happen has happened because people are creating tokens and using them to circumvent securities laws without all of the things that prevented all the problems that happened over the last century.
Okay, thanks, Alexander. Celsius Custody, the agent Metro.
Hey, Mary, thanks for having me. Simon, I've got two questions for you. And the first question is that there have been some individuals on Twitter throwing around some FUD about Bank to the Future. I'm sure you've seen that. What's your response to that?
So lemons and cats often block me and then say things about my company to try and push forward their agenda because they don't like that I'm supporting creditors and they prefer to support the price of the sell token outside the app. And so I've been dealing with that quite a lot. And so I think what they're asking is they think that Bank to the Future is like a crypto lending platform or an exchange where if you invest those funds, then you're using client money, which is the exact opposite of the business model we set up. So if you want to understand the principles of why we set up Bank to the Future, we wanted to create the ability to have full segregation between custody and investment, and then change securities laws so that when people invest, they know that they're moving it from custody to an investment with full disclosure, and then suitability so that we could increase the number of people that could invest. And so the whole way we set up our business model is that if you put funds on the platform, then they are segregated and held in custody, and we're not able to use those funds. And then regulators ensure that we don't use those funds because they're centralized. And then when you want to invest, you move them over to an investment, and we disclose the risks, and because you've done a test to prove that you could lose all those money when investments like Celsius equity goes wrong, or you end up with public company stock when a company like Coinbase goes right. So that even if every single person right now wanted to withdraw their funds at Bank to the Future, we're not investing those funds because we offer securities and custody. We don't do the hybrid model where you lend us your money and then we start investing them and then create the ability for a bank run to happen. We've worked very hard to make sure that that's not how our business is set up.
Got it, to mitigate that. No, I appreciate that. And my second question for you is, if given the opportunity, would you still like to put a bid in for Celsius?
I made a commitment to creditors, and nothing has changed with my commitment. I said I'll be here for creditors until the end of the bidding process, and at the end of the bidding process, I need to move on and focus on my book, my shareholders, and other things. So once I realized what the process was and figured it all out, so I said I'll remain committed to do all I can to achieve two goals, which is one, make sure that all creditors get whatever's left in custody in a business that is not subject to a bank run, and also package up any remaining value into a security and give them a marketplace in order to be able to exchange that security if they want or not. So those commitments are still there, and the bidding process still exists. And so, yeah,
Great.
still got that commitment.
Thanks so much, Simon.
Thanks for your question. Simon, I had someone that has a spotty, their microphone isn't working, and they DM'd me. Shall I ask you his question? And he's in the audience.
Go for it.
Okay. His question is, why the secrecy about preferred equity in Celsius case? Filed motion saying we own GK8 mining, not Celsius customers. Seems a huge issue. The judge denied motion, but says, I expect to hear from you, but have we? So he wanted to understand that.
I didn't follow that today because I was so much on the FTX. So I'm assuming that there's a new motion assigned around the preferred shareholders. So there's a group of preferred shareholders that wanted representation in this case, and it was denied by Judge Glenn because he made the determination that they're sophisticated Series B investors like Canadian Pension Fund and various other ones, and they didn't need our money to pay for their representation. And one of the things they've been constantly hinting at is that they would like to dollarize the crypto of creditors so that if the price of Bitcoin goes up, they benefit from it. They've also been looking at potential cases around how they own the assets that are being bid off. Some of the assets are being bid off. They're obviously representing their interests in order to achieve that. And Judge Glenn has really I think, expressed that this is, the equity doesn't have value and that this is a creditor's game. The UCC has represented that they will violently oppose such measures. So I think that's what it's referring to.
Yes.
Yeah, this is David. I'll just add to that I mean, I think their argument is, when you look at the Celsius org chart, there are something like 24 Celsius entities, and only 8 of them or 10 of them filed for bankruptcy. So there are a lot of non-debtor entities. And when you look at GK8, its parent is a non-debtor. And then when you go up to the next level, ultimately the debtor entity is the entity that has the preferred Series B associated with it. So their argument is essentially that, if GK8 is sold, the money could be upstreamed to the Celsius Network Limited UK, which is the Series B entity, and that they would have an entitlement to it. I don't think it's going to, for the reasons that Simon said. I think that the judge recognizes that, it's not this is a creditor case, not an equity case. But I just wanted to add that what their argument is, because of the structural issues in the Celsius filing itself. And that's really it. I mean, I think their arguments are, in this case, are really meritless, given the hole between the creditor's claims and the assets that are presently being held.
Yes, I hope anyone that's joining this call from FTX is starting to learn from many of the things that are going to be coming up, because all of these games are going to be played, I think, 1,000 times more, and on a much, much bigger scale with a much, much more complexity.
Right. Okay, next we have Adam.
Yes, hello. Actually, so just one question. When any exchange that we use requires our money to be held for like 2 weeks whenever there's a bank transfer. Now, I had some coins on FTX, which I just leave it on until the money clears. But now I'm wondering, what exchanges are safe? If I want to buy Bitcoin now, I have to transfer the money. I have to wait 2 weeks. And it seems to me like anything can happen during those 2 weeks. I mean, I know it's probably not a fair question, but so what's left now? There's Binance, there's Coinbase, there's Gemini. Those are the last of the large ones that I can think of. Then there are smaller.
Yeah, so the answer's never really changed. And the answer from the first exchange at launch, when it was, whether it was Mt. Gox or BTCE or Cripsy or MCX now, or anyone else that's old enough to remember all these exchanges, that the game of an exchange is simply to make a trade. And then once you've got what you want, you take it off. Now, if you're a trader, you then have to expose yourself to counterparty risk in order to have the benefit of continually trading. And then the exchange that you use, really what we need in the future to get beyond this is public company level disclosure, which is essentially a company like Coinbase has to publish their balance sheet every quarter. You need a regulatory environment that holds them accountable to a very clear process of what happens if they go bust or if they lose client funds. And you need very financially strong companies. So when you're asking that, you're saying, well, Binance is financially strong and they're making lots of signal around how financially strong they are. And they've implemented free market insurance solutions and various other things. So people are growing confidence in their signal. And then you've got an exchange like Kraken and Coinbase. So Coinbase is a public company. Kraken wants to be a public company. And then you've just got also security that sits on top of that. So unfortunately, the problem has always been the same. I can never stand here and say you should use this exchange, because if that goes wrong, and I told you to use FTX, then we'd feel like crap. All you can do is risk manage, and that's the game of investing as well. The game of investing is simply understanding the risks and putting together a portfolio that manages those risks. Because if it was a riskless environment, there would be no return. And so that is the same game. So what we always, when we did the Retirement Plan B online wealth management program, we put together a financial model for them. They do their own balance sheet and cash flow. They figure out how much they need to allocate in order to achieve a certain goal. And then they manage all the different risks, and they put a bucket allocations into all the different risks, so that if one exchange blows up, just like it did with Celsius, was an exchange, but you've already factored that into your model and your 10-year plan. And that's kind of the work that we do with our clients.
Thanks for that question. Next, we have Gunnar.
Hey, good afternoon, Simon and Mary and everybody.
Hey, Gunnar.
Hey, I had a quick question. I'm trying to follow these rooms as much as possible. When I've been with Celsius a couple of years, and when they had this thing come out where you had to, if you had a certain amount of funds on the site, you had to register to be an accredited investor. So you could move your funds from earn to, oh shoot, I can't even remember now, but
Into custody.
Right. And so,
so you joined Celsius 90 days prior to them going down, I think, because that was only created about 90 days before. 89 days, exactly.
Right. As soon as they said that, accredited part, I filled all the paperwork out and got approved. Oh, it took a good week anyway, week and a half, and I got approved and got set up, and of course, this obviously, it devastated me like several others. I can no longer retire now because they have everything that my wife and I put in it. So I'm saying all this to say, if we're looking at if Celsius is actually going to reorg, or Simon, you're lucky enough, I guess, to bid and win the assets of Celsius, do I need to be doing anything or filing a form or at this point? Because I've not done anything but try to listen and gain as much insight as I can. And then, of course, all this stuff happening this week has been disastrous. So I really don't know what to do.
Yeah. So sorry if I haven't got the links, but look at some of Aaron Bennett's videos and stuff. But basically, there's a web page where you put your email in on somewhere on Stretto, and when you put your email in from your Celsius account, it will give you your balance, and then it will tell you all your coins. And if you agree with that, then in theory, you don't really need to do anything. If you want to be extra careful, then you can also fill out a form that lists all the coins, but I think we're still waiting for that form to come out. Not whether you should follow me or anything, but I haven't completed any forms, and I just checked my balance, and it looked exactly how it should. And then the other thing is on our side, if you want to stay up to date with the bidding process, we're working on a feature on Bank to the Future where people can be able to participate in bid funding. And you would need, and being able to, for those that want securities and those that want coins, be able to match them up in a marketplace. So it's a bit, we'll be releasing lots of educational videos on that and creating a new Chapter 11 product to try and get through many of these processes as efficiently as possible. So that requires having an account on Bank to the Future, and you need to verify and certify it. And there's a waiting list for accounts at the moment. So you can get ahead of that if you're interested in that, but that's not essential.
Thank you, Gunnar. And then, as always, that's not any legal advice. Next, we have Laser Has. Laser Has? Okay, we can't hear you. I'm going to move on to the janitor. The janitor, can you hear us?
This will have to be my last question as well, because I got the interview with Rob.
Right. Okay. So neither one of the two unmuted, so I'm just going to.
That's all right. I'm here. Can you hear me now?
Yes.
All right. Sorry about that. Simon, I just had a quick question. Yesterday you had that, or the other day or something, with the Real Vision Twitter space. I was listening to that, and there was a little bit of a debate between you and Raul Paul in regards to who should be to kind of blame in regards to the regulations. Raul Paul was really kind of targeting kind of Gary Gensler as the main culprit here of why we're seeing all of these problems today. And then, you kind of push back saying that there's all these existing regulations already. It's not like there's no regulations. It's just people are not following it. And it seems like, based on your comments, people could be, take the moral high ground and be ethical about it and follow the regulations. And that's kind of on the person to do that. Do you think, is that kind of where you're coming from, or do you think Gary Gensler really has something to blame?
Both. So firstly, companies have to make a hard decision. Why don't they do it? The reason they don't do it is because regulations ruins your onboarding experience. And when you're competing with an exchange, it allows you to, with one click, sign up. And someone like a Bank to the Future, where we have to get your source of funds, source of wealth, do a suitability test, it kills your user experience, and your customers don't like that. And then now it's okay when everyone's doing the same thing. So if you open a bank account, you expect it to be difficult, or if you open up a brokerage account, you expect it's going to be slightly more complicated. But the exchanges basically didn't want that, and that was customer driven, because they were competing with other exchanges that weren't complying, and therefore everyone would go over to that exchange. And that was kind of the BitMEX Binance thing, that if another exchange puts together a user experience that doesn't necessarily comply, everyone starts using that, and then they get all the liquidity, and it encourages everyone else not to comply because everyone starts complaining about your user experience. So at Bank to the Future, we've had to deal with that because people are in the crypto space, and then they want to invest in a security, and then they have this longer account sign up process. So that's the reason why that people don't want to do it, because they're in a competitive environment where you're competing with people that are not going to comply. But in terms of both, regulations have also, here's my thing. I've always lobbied to change the law to get better regulations. And also decentralization becomes really important to that process, because if the alternative Bitcoin didn't exist, when I was lobbying for regulatory changes, often you don't get them, or you might get some of them. So the medium here is you do need to have Bitcoin and decentralized finance products in order to be competition, and you need countries that compete, and then you need ethics to prevail as well. At the end of the day, at Bank to the Future, we installed a culture of, no matter what, you don't misrepresent things. You let people know the risks, even though they're going to invest less because you let them know the risk. Well, that's a good thing. And so there's a culture thing within these companies, and then they're built around that culture. And if you build a company on a culture of let everyone have affiliate codes and everyone misrepresents and then everyone copies what I said on an AMA, you get this cascading effect of misrepresentations, and then regulators have to come fast. But they're also trying to fight. They are limited in their resources, and also there's corruption within regulations. So this is all human nature. So you've got good actors and bad actors within regulations and within companies. And at some stage, you need to be able to get that balance between the regulation says we have to do this, but our culture says we should do this. And that's the companies that I think are going to succeed.
Yep. Yeah, Simon, I think we're at that time where you have to sign off. Thank you, everyone, for being patient. And I apologize to those that I could not get to. I appreciate everyone here coming to the room and asking questions. Thank you, Simon.
Okay, awesome. So yeah, I'm going to head over to Rob's channel, Digital Asset News, answer some of his questions. And yeah, I'll close off in a way I always close off. So if you're from FTX, I'm sorry I didn't want to welcome you here. If you're from BlockFi, then you're probably going to be joining us soon. And if you're from some of the other platforms where this contagion has an effect, then we have millions and millions of people and we're all in this together. So it's not going to be the funnest journey. You're going to feel very low at some times. And other times you're going to get into your empire building mode and realize that together we can build something special out of these processes. If you've been destroyed financially, remember that destroyed financially is a temporary state of being. And it's only how you react to it and how you interpret what it means to you that will determine the next actions that you take and how you recover from this scenario. But at the same time, appreciate that we're only human and sometimes we feel low and other times we feel on top of the world. So you're going to go through all of these journeys together, but remember, no one ever said this was going to be easy. We're actually, with Bitcoin, we've actually created digital hard sound money. It should have failed. It didn't fail. It has succeeded. And there's all of these twists and turns in creating something that actually, I believe in the end, is going to be very, very important to many, many people. So always remember you're alive at one of the most interesting and exciting times in financial history. Some are going to get hurt, others are going to do really well. And I want to make sure that you're on the right side of that change. Thank you. Peace.
Thank you.